Hey everyone, welcome back to Corporate Decoder, the place where we pull back the curtain on the world of business and unpack complex financial filings with a smirk and a story. So today we are looking at Flora Growth Corp, and let me tell you, they are shaking things up with their at-the-market offerings. Before we dive in, if you're tired of corporate jargon and want clear, no-nonsense financial insights, make sure you hit that subscribe button. And hey, we have a fantastic community over on Discord to discuss these findings further. Link is in the description below. So, Flora Growth Corp has filed an 8K report, and this is just any regular update. It is about how they're re-raising money, and it tells us a story about their strategy. Essentially, companies like Flora Growth Corp have to tell the US Securities and Exchange Commission, or the SEC, when significant things happen. This report is like a public announcement about a big business move. Now, what is the big deal? Flora Growth Corp is looking to sell more of their common shares, which are the basic pieces of ownership in the company. They are doing this through something called an at-the-market program. Think of it like a grocery store that can decide to put more bags of their own brand of chips on the shelf whenever they feel like it, up to a certain limit, of course. They v-filed what is called an ATM prospectus supplement. This just means they are updating the official paperwork to allow them to sell more shares this way, and the amount they can sell, it is an additional $3.45 million worth of their common stock. They have this agreement in place with a company called Revere Securities LLC. This relationship helps them manage the selling of these shares in the market. It is like having a broker who helps you sell your house. And here is an interesting twist. By filing this new update, they are officially closing down an older plan to sell shares. They managed to sell about $129,482 worth of shares under that previous plan, which is a pretty small amount compared to the new one. This suggests they are shifting gears and aiming for a larger fundraising goal. Now, it is worth noting that Flora Growth Corp has checked the box to be considered an emerging growth company. This means they are a younger company and get to follow some slightly different, often less strict rules on financial reporting. It is like a startup being given a bit more breathing room compared to a giant corporation. The filing also includes opinions from their legal advisors, like Fogler, Rubinoff LLP, and Dorsey Footy Whitney LLP. These are basically the company's lawyers giving their stamp of approval that everything is in order legally for these share sales. Signed by Danny Vayman, the Chief Financial Officer. This is the person who is ultimately accountable for the company's finances. Seeing his signature on this report signifies that the company is moving forward with this plan. Now, looking at this filing from a broader perspective, Flora Growth Corp is basically telling the market they need more capital, and they are choosing a flexible way to get it. The at-the-market program allows them to raise funds gradually, reacting to market conditions, rather than trying to sell a huge chunk of shares all at once, which could potentially depress the stock price. This is a common strategy for companies that want ongoing access to funding without the immediate pressure of a big one-time stock sale. The fact that they are terminating a previous, much smaller offering and launching this larger one suggests they have a renewed or increased need for capital. This could be for several reasons: expanding operations, research and development, acquisitions, or simply to bolster their balance sheet. As an emerging growth company, they are likely in a phase of significant investment and growth, and this fundraising effort supports that trajectory. One key thing to watch with at-the-market offerings is the dilution of existing shareholders. As more shares are sold, each existing share represents a smaller piece of the company. While this allows the company to grow, it can impact the value per share if the growth doesn't outpace the increase in the number of shares. The success of this strategy hinges on Flora Growth Corp effectively using the raised capital to drive profitable growth that benefits all shareholders in the long run. So, what is my take on this? Flora Growth Corp is playing the long game with this strategic move to secure funding. They're opting for a flexible approach rather than a large immediate sale. This shows ambition for growth, but also flags the potential for shareholder dilution down the line. The real test will be how well they deploy this capital. If they can translate this funding into substantial business expansion and profitability, then this move will likely prove to be a smart one. Otherwise, it could just be a way to raise cash without a clear path to value creation. One risk is that the market might interpret this as a sign of financial weakness, potentially impacting the stock price. However, for a company in its growth phase, securing adequate funding is crucial. Alright, that is our breakdown of Flora Growth Corp's latest filing. What is your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.